Evening everybody, Merry Christmas, Happy Boxing Day, and welcome to an extra little live stream I decided to do. I just got back from obviously all the Christmas kind of stuff and decided I wanted to do a bit of a live stream just to try and explain a little bit about the axe trading system and what you get if you join our group. Go over a few different pairs and just to see how effective it is if you're just scalping using our axe trading system and kind of what it entails and everything. So because obviously the markets are closed, I've got a nice banana flavoured beer here, so with one swig on them. Very nice. It's been a good year, and we're going to have more people join the group in 2022, so obviously I just wanted to do a video and a live stream just explaining about the actual system and how to use it and how I can show in a back test how effective it is if you really want to scalp this aside of trading the news, because those who follow us know that a lot of our trades are based on the fundamentals and news events, which is fine if that's what you want to do, but at the same time, if you want to avoid the news events and just scalp using TA, then you can also use our axe trading system here. So let me begin. Obviously we're looking at US-30 here, and I'm going to look at go back a day or so and let's just do a day's worth of trading. We'll have a look at a few different things, but firstly we'll have a look at what you actually get in the system. There's three kind of indicators that you get, and the whole idea behind that is that you can just have the free membership on TradingView, and once you pay to join our group you get this system as part of the package as long as you stay in the group. So you don't have to pay for the Pro or the Pro Plus versions of TradingView. You just have the free version, and if you join our group then you've got everything you need here. So yeah, the axe X part. which it gets updated regularly. So at version 1.07 at the moment. There's always tweaks to do with trading view and little things we come up with to make it better. So we've got our points of interest, which is our grid system here. As you can see, the green and the red line. The basic points of interest are a mixture of support and resistance and Fibonacci. And you can have the line on here, and you can have it going in both directions, as I have here, going across the screen, or you can have it just to the right or just to the left. There's extra levels, so what you can do, you can take out the kind of medium impact level. So let me show you. So you can take out that level here, and then you're just dealing with the major support and resistance zones, as you can see there. Now these are the key kind of levels that price likes to break or bounce back from, and you can use these, you know, just on their own. So you can, you know, if you want to do more micro scalping on a smaller time frame, which I do on the 3 minute, then obviously I use the extra levels, because these are medium impact lines that still have, they still work, and obviously they just get me in and out of the trade quicker. But if you want to hold a little bit longer and you want to just bounce off the major minor resistance zones, then obviously you can choose that. You've got a little option. And obviously there's a signal you can have, which is a signal level on here, and you can change the bar colours. There's a volume pro indicator built into this, so if you, those who like to trade volume, that is built into this. Nice little feature you can have. Comes up. And there it is. Volume grid tells you the levels where people are buying and selling. That's a nice little feature you can have there if you want. And these are all custom settings. The support and resistance, trend lines, breakout zone, VWAP, baseline, and a trend signal level. That's pretty good. So there's a lot of indicators built into just the X. And then we've got the Y, which is basically you've got different clouds you can have. We can have a trend channel. You can have on here, look, a trend channel as well. Trading those, like to have those on your screen. Pretty cool. There you go. Like trading bigger moving averages and like to trade a clouds based system, that is also built in well. And the old Bollinger Band, which I love as well. Bands in here. Again, there's a good one, again, custom settings. Our favourite Ichimoku cloud, which we use as our baseline, the KG line anyway. But you can put the cloud in there, again that works. This is even on a 3 minute time frame, which is what I trade on, as you can see. So you can have a cloud on there as well if you like trading. You know, again, risk off, so you know, you just want to be able to clear the cloud and you take a trade. It's as simple as. So again, I teach that in the group. There's a moving average cloud. Again, there's different signals and display lines you can have in there, etc. as well. So that's a pretty good one. So if you like, again, trading your moving averages, your cloud, look as you can see. Comes into the cloud, you obviously not taking the trade. Goes red, you look direction. And all this is kind of stuff that's built in, it's been designed. And then we've got an alert system and the dashboard. Finally, our favourite is the Z. And on the Z system, we've got our RSI custom. Okay. Or you can have a stochastic on there instead. Go to trade that, or you can have a momentum indicator as well. And then you've got MACD and BACD. You can have both off or just use one as well if that's your thing. And again, all the settings can be changed. And you've got a trend bar at the bottom, which you can see here. Look, trend bar green. When it goes dark, it's trying to change the trend. And we've got a divergence indicator as well, which obviously we use on the chart, hidden and normal, and we've got the alert system as well. So that's all what you get in the package for being part of the VIP Discord group. So you don't need anything else basically. There's all the best indicators, the most popular ones that are used all over the world, built into this and tweaked for true scalping. So we'll use this on the 3-minute time frame, some use it on the 9-minute, some use it on the 15, you can use it on the 1 hour. No doubt there's people who use it on the 1 minute as well. My favourite, I always show it on the 3-minute, just because I've got used to using that. I've been using that 3-minute time frame for a long time now. And again, because I like to watch my trades. I know using the 3-minute time frame, I can usually average about 20 to 30 trades a day. So with that, you can work out what you would need per trade need to earn. So say like the time of this video is $200 a day, then obviously say I'm doing 20 trades, no, I'm going to be about $10 a trade. So from that you can work out your lot size, you can work out your risk, and so on and so forth. Now if you go to a 9-minute time frame, obviously you're probably only going to be taking 10 trades. So if you want to earn 200 from that dollars a day, again you'll be looking to take $20 per trade, therefore you increase your loss. So that's just how I kind of work it all out, and how you can come up with earning the figure that you want. And $200 a day is easily achievable with $1,000 startup account. You know, some riskier trades, some not so risky. Obviously if you're starting 2,000–3,000, it's more easier to do. I usually try and aim for 10%. So a $2,000 account should reap you $200 a day using this system. And this is over a week, based at the end of the week. You can have some days where you could take some losses, some days where you're going to be in profit, you know, but by the end of the week you should have hopefully grown 10% your account at least. I mean, I try and do it per day. The minimum you want by the end of the week is 10%. So, you know, you could earn between 200 a day and 200 a week. It depends on the time you spend on the computer and trading as well. And then some of the guys like to trade just Tuesday, Wednesday, Thursday, avoid the volatile days, usually Monday, Friday. I usually trade 5 days a week unless I'm doing something else. So again, it all depends, but this is all stuff I kind of teach in the group on one-to-ones. How to manage your risk, how to know what lot size to look for, and once you've got it set, you don't touch it, you stay with it, you don't mess around with it. That's the whole thing that sometimes people get carried away with, is they move their lot sizes around too much. You know, they're always chopping and changing account sizes and lot sizes, you know, the risk reward, all that kind of thing. So we try and keep it, once you've got a kind of winning formula, try and keep it at the same kind of level, make it easier. So all you're worrying about then is actually entering and exiting the trade on your broker. You're not using your broker account, wherever you're using, and to analyze any trades. You know, we're not using MT4. You know, you might be trading on MT4, your broker. We take all our trades via TradingView, and the majority of my trades are taken on my phone. I've got my broker and I've got a big buy and sell button. Basically that's it. I'll just look at TradingView and enter off that, because again that can, you know, conflict what you're seeing. You know, because brokers are all different, prices are different, the lines. That's why I always quote points and not pips, because I look at the points on TradingView and you then convert that to over the R on broker in -10 times 10 sometimes. So all this is, a lot of people don't get a chance to, you know, or don't want to tell you, so they're all bothered about showing you their system, how to make you rich. But you need to know all this before you start trading. Surprised how many, you know, people have been trading a few years don't understand all that. It kind of, you take in the guesswork. You don't want to be guessing, you don't want to be gambling. At the end of the day, trading can be simple. At the end of the day, it is buying or selling. Price is going to go up, price is going to go down, and you don't want to overcomplicate it. And even on scalping, you know, people say you can't make money from it. You can. but you just don't have to overcomplicate it, and you've got to be prepared to watch the chart and be in and out as quickly as possible. That's the whole idea behind the true scalping kind of method that I teach. With the axe trading system, what we're doing, this gives us levels to get in and out of. We're watching price action, crossing a baseline. You know, there's nothing magical about it. These are all custom settings, but again, you can learn all this just normally. But this system is really handy if you're into scalping, because it'll keep you on the right side, and it'll stop you, taking trades you shouldn't take, and it'll make you sit on your hands, which is what a lot of traders find difficult, even on trading 3 minutes. As you can see here, so let's take examples here. Let's go from, this is the last trading day, such as the 23rd. This was Thursday. See here, like here is a mark off and an open. Yeah, you could do this on any pair, but start it here, look. There to the end of play. So what I like to do first is look at the RSI, because a lot of people love this RSI, this kind of RSI scanner, and you can look to take trades with this going in and out. So I like to place the trades on here, run a back test, see what you would have got, and then see if you would have taken the trade when combining it with the price action. The best thing to do is put this on a separate screen. You don't have to have a massive setup. As you can see, I've just shown a picture of my current setup. I've got a couple of setups, but my favourite one, couple of screens, laptop, that is it. You don't need to have 20 screens. I've got everything I need. Again, you're just spending money, that money will be going into your trading account, not on your equipment. I think you've got to have 2 screens. I think that is it really does help. It's hard on one screen. Unless it's one of those big curved screens you can split. Because good success will come if you can split this RSI onto a separate screen like this now, and have a side view and watch it. If you like trading a good RSI, which is as good as anything out there, I say there's momentum and stochastic and stuff. RSI has always been the popular one. It's just that people tend to trade it the wrong way and are always waiting to catch reversals, whereas with this we're really trying to catch the trend and then get bonus trades with the trend. Then we wait for it. If we zoom in on here, see how you get the divergence. We'll have a look at the divergence as well and see, if these are accurate or not. It's good to test. Obviously, like with anything, the bigger the time frame, tend to be more accurate, but they do work. They do work really well, and they give me a heads up. So, like here, right? Let's start. Zoom right in. This is a good thing about this. So we've got a neutral zone here, which basically, is a risky zone. It's where anything can fluctuate. So you're a risky trade if you take trades within this zone, but you can. There's no law says you can't take a trade inside it. But it's just if you want to be less risky, you wait until the RSIs come out of this zone. And also we've got our average line, which is kind of telling us what the average value of the RSI has been over a certain period of time. Like here, I'm on here and it's 58.3. So that's the average over the last period of time that the RSI has been. Now what we try and decide is that when the RSI actually comes and crosses that line, it's time for a change. It's more likely going to change direction. As you can see here, RSI was high, here was the open. It's colour no trades here. Then we see it cross. Now some traders will take the trade as soon as it crosses and look to take a TP as it enters the neutral zone, because with the neutral zone you can get a bounce off it. It doesn't on here, obviously. As we see, it comes into the zone and goes nicely. So here's potential. Some risk on traders would take this trade. Now to be ultra cautious, you either take it when it goes red, which is just inside, or you wait till it's just outside the neutral zone. So if we put a marker here and say that could be our first trade between here and here, kind of as you would see it. We'll mark a few up and then we'll have a look at price action in comparison. RSI obviously doesn't go down to our oversold zone, goes back grey again. So for some people you could end the trade here, but we'll have a look at it. We'll lay out 4 or 5 trades at a time, see where we are. And then again, look, it goes green here. You've got a choice of taking the green here for a riskier trade, or you wait till it crosses, when it crosses the average and the neutral zone at the same time. Around about here, look. So that's kind of a good trade for a second trade, because RSI has spent a long time relatively in red, and it decided to pop up, so we're worth a scalp here. We'll take that as a trade. So that's 2 trades. Let's get rid of this one. Start the session, and then we're looking for trade 3. Now trade 3 again, it's gone red, and again you can go in on this and you can come back out and you'll take your profit as it hits that line. Why? Because again, this RSI average can be a support and resistance, same as the neutral. You don't know it's going to do this. You could say, oh yeah, look, it's telling you to get rid, look, I've missed out on all this, but you do not know. This is the thing about back testing. It could lull you into a false sense of security, because you go, oh okay, I'll just hold because the next time it's going to do the same thing. Well, it could have just bounced off here. You could have had a TP down here and it would never hit it. So if you do take these trades where you're taking it, it's above the neutral zone, it's still in buy territory, and it's above the average line, which again tells me more bullish than bearish, you want to be prepared to get out early. So you can take the trade and get out here, as you see. But again, for those of you who are more riskier, risk off traders, then you want to take the trade kind of here, look, comes out of the zone, kind of find, scalp there. That's 3 trades. Same again here, look, again you can take this trade here and exit it as it hits the average line, again quick scalp, or you take the trade here, comes out of the zone. Again, why? Because it's not really ranging in and out. Now when you see the RSI going red green red green red green inside the zone, you wouldn't do what I'm doing now. You'd literally be waiting for a period of time above or below. And I did a little bit here. Overall it's kind of, this is kind of like a fake breakout, but overall it's below. So every time it does actually creep above, I want to get in on it, because this could be the end of this bearish move. We had a bullish move here, a bearish move here, and now look, we don't know this is going to happen, but it was right. It ends up being a kind of a bull run on the RSI strength index. So, and now what we get here is our bonus trade, and this is when we'll look at price action. When we see it go bright green, trying to enter our over support zone, this is where we get the bonus trades. In fact, it comes out, this is what I love. I love it when it goes in, we take our profit, we come back out, and it goes back in again. So here's 1, 2, 3, 4, 6 trades to analyze between 15 minutes after London Open and 45 minutes of trading. Now that's based on the RSI. Everyone would agree they look sound kind of entries. Let's have a look. So now we have a look at it in conjunction with price action. Zoomed in here, here we go, look. And as everyone knows, on US-30, and again we're trading this in London session, which we don't usually do, but we're looking for 5 to 10 pips per trade, because we're going to be doing 30 odd trades in the day. You might be saying, well, I want to hold for longer, I should be getting 10, 20 pips. Well, then you have to change your whole strategy, up the time level that you're trading on, because we're on a 3-minute time frame, and then you down the size of trades that you're going to be doing for the day. Me, I like to do 25, 30 trades a day. Well, positions, so not even trades, they're positions. And that's with 2 positions. Again, I explained that later, but that's what I do. I enter 2 positions on everything I do. It's my way I do it. So let's have a look. And we can again, we're zoomed in nicely here, look, so we can see what we'll get. Now, here was our first entry point, and as you can see here, look, RSI it's gone red. The price action, it's sat on our kind of RSI line here, look, on our baseline, So you have to think, would you take this trade? Now you have a look at the price action previous, and it's all been a little bit, all the way it's ranged a bit. Morningstar, Doge stuff, and then you've seen this bearish divergence. It's also an indicator, and usually with the bearish, with divergence I count 5 candles before you take it. 2, 3, 4, 5. So this is the 5th candle, indicated by the divergence as well, and a load of candles that are being green above. But yeah, I would take this trade. Okay, it's not this red one here. Now if I missed it, I would take the next one. Now what I wouldn't do is wait for the candle to finish, because you don't need to, because this is kind of, if you're an experienced trader, you would have a good idea that RSI has just clicked red. More than likely this is going to actually just drop, at least to get 10 pips or whatever what you want before any kind of reversal, which it does. But on the next candle, why would you want to wait? Again, if you waited, you'd obviously probably take a loss, so you might measure it. But you don't always have to. People are obsessed with this candle close. I think that's okay, but you need to know when things are going to go the way, and all you're doing is delaying you getting in the trade. This is, I think, how a lot of people lose trades. They wait too long. Sometimes you've got to push the button. You can't always wait for the candle to close. It would be a perfect world if every time a candle closed, the next one is 100% your way, and it doesn't work like that. And again, why would the market do that? Why would the end of the candle go, okay, let's give everyone their money, the candle's closed? You have to get in sometimes half candles. I mean, it's hard with back testing, but I wouldn't even, I mean, as soon as I see this candle red, I would be in, because I've seen the grey with neutral, I've seen the green, I've seen the price action here telling me there's an indecision, I've seen the RSI break and go red, it's below our average line. So if I was umming and ahhing about this candle and this finished here, as soon as I saw the next one go red, I would be in. I wouldn't wait for the end of this candle. Now if you did and you entered late, what that candle look? You measure it down to the wick of the next one, you'd have been okay for 50 pips, 5 pips look, 60 points, but you wouldn't really be getting what you need to get out of it. And obviously for a lot of people, you would get out of the trade as soon as you see it go grey, so you might break even on that one. So it won't be a losing trade, but you've missed the opportunity, because if you watch price action and you've been watching the US-30 pre-London Open and you see its divergence, like I say, I like to count 5. 1, 2, 3, 4, 5. It's kind of spot on. The end of this candle, again, and it's not this one here was a hammer. This is a full candle. I would take that trade. Now, if I took that trade, I'd be looking for 10 pips, and yeah, these got 14, 15 pips there, even with a spread of a pip or whatever. We're well in. That would be for me, that would be the first winning trade. And I think the problem with these is, obviously you never really want to enter on a support or resistance line. This is our baseline, but sometimes you've got to think, you've got to look at how the market is running, look at the price action. And this is why we're price action traders. We're not just TA taking because the indicator tells us to take it. If this had been a green candle sat on our line, you wouldn't take the trade. But the fact it's gone neutral and we've seen the red, seen the shape of the candle, this is a good one to take, and we're just in and out. 10 pips is fine. I mean, 10 pips gets you, can get you between $10 and $50, right? Perfect start to the day. That's trade number 1. Trade number 2. Trade number 2, we go the opposite way. Now, here's why I said you could get in if you're an aggressive trader, and again, this will be your gamble, because it's grey bouncing up. Now you don't know if it's going to finish here and suddenly drop, or if it's going to do what it did. So again, that's just where the risk comes in, and you would get in and out of the trade as it hit the average line. So you might get, if you got in on the candle, top of that candle, you might get, again, you'd want to be about 5 pips, so you get about between $10 and $20 or whatever on that trade. if you're a riskier trader. But for me, you want to be in on this one, yeah. And again, a little bit before, as it, you know, it's not quite accurate, it's as it crosses that line. So it's probably as that goes green. I wouldn't wait again for this to finish. Why would you? You've seen the price action, you've seen the, look at the RSI is your friend. It's telling you you've already gone green, you've decided not to take the trade. It's staying green. As soon as it breaks that average line on the neutral zone, you're in. So whatever this, I mean, it could be halfway that candle, could be the bottom, could be the top, doesn't really matter. And again, you know, we're looking for 10 points. So from the top you're going to get 5, but say you caught it from the middle, fair kind of assumption, then you're going to get, again, you're going to get your 100 points, which is 10 pips. So that's a winning trade again. Whether you decided to take a quick scalp on this or you decided to wait, you know, again, if you're waiting for candles to close, you've got to lower your expectations. If you're going to get in a bit, you know, as the RSI breaks, then you go for the 10 pips, and that's perfect. And this applies to any indices. On Forex pairs we look for 5 pips, but on indices and gold and silver we look for 10. That's the formula I use, and that's what I try and aim for. I don't always get that, because sometimes I'll see price action not go where I want to be, so I'm not stupid and going to hold for something that isn't going to get there just because I've said I want 10 pips. If it only goes to 8 and it looks dodgy or it's ranging, I'll take the profit and wait for the next trade. Because that's the thing with this, there are plenty more trades. You should never get FOMO, because this is outside of trading the news. You add the fundamentals onto this and you're talking 30-40 positions. This is to show you how you can do this without having to worry about the news. If you want to trade things outside of news events, not taking news into consideration, back testing here, you know, just going with what the EA is showing me.
Or 75 trades in a day if you go off the rails.
Exactly. 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 So, with the next trade, with the next trade here, look, you can see again, RSI again. You could get in aggressively, as I said, as it goes red here, and you might do, because look at the candle. There's a on the Doge, looks like it prices at decided indecision, and again I would get out as price hits the baseline. So again, that could be a 5 pip, easy look, 5 pip win. So you can see that, you say, again, don't just think, oh, it's going to break, you know, because it might not. It does, but we don't know that when you're trading these ones. Trying to take a less risky approach, not it's the problem of backtesting, you know, because you see things that you don't know are going to be there, and that's the problem with it. I like to trade live, but show people how you're meant to look at this. Now with this one, obviously, as soon as I see the candle red, and with this one you could wait, because it's a nice big candle, it ends nicely below our baseline at the same time as the RSI comes out the zone. So whichever is first really, if the RSI comes out of the neutral zone, I see the candle forming red, it might be spiking above and below baseline, I'm going to go for it. Again, because I'm looking at the price action, I'm looking at the RSI, and the fact that you had this previous candle telling you that the market isn't going to be, you know, up just yet. So again, you could get in halfway on this candle, or you wait until the end of it. If you wait until the end, in this case scenario, still going to look and get 10. Or look on the next candle in at 157. So you're going to get your 100 points again. So basically we've done 3 trades. We've gone in for 10 pips each, which usually, again, if you're using a $2,000 account, say, you know, using 5 lots, 0.5 and 5 on IC markets, how they work it out, you're probably talking about $40, $50 per trade. So if you get earning 200 a day, you're already 150 up. If you're less risky, you know, you might be half of that. You might be trading a smaller lot size or just looking at 5 pips, you know, which is perfectly fine. Don't think that's bad not to take, you know, just a smaller amount, especially if you're trading US-30 in the London session. So maximum you could be up $150, saying by now. The least you should be up is $75. We're looking for $200 a day, you know, or a session, which is the whole point of this video. And we're kind of already there already. That's not using a stupid, you know, account size. Again, you can do this with $1,000. You can do it with $500, but obviously you're going to be looking at $100 a day. You know, you've just got to, everything has just got to be scaled down. You trade exactly the same way. You don't trade differently. I know there's people who teach you how to trade. You trade differently with a $100 account to a $500 account to a $1,000 account. You should just, the amount of the account size should not make the difference. You just trade the same way. All you're probably going to do is increase your lot size. And for me, when I get above $1,000, I keep the same lot size. Just don't enter as many positions to obviously make sure I'm not over leveraged and over margined. So again, just don't change what you're trying to do, no matter what account size. If you're doing a $100 account, then obviously you just want to be looking for $1, $2, $3, $4 a trade, you know, and that's fine. You get used to the habit of doing this system, practicing the same thing over. So the next one, so RSI comes down, goes grey. This is what I was talking about earlier. It goes green again on a grey candle. So again, for those of you who are a little bit more risky, you could get in on that candle. Probably get out. As you can see, there's a points of interest lines. Hold for that, or hold for 10, or for RSI clicks and hits the average in case you get a reversal. You don't know it's going to do the run. Again, you could get in on there. For most of us, you'd probably get in on this candle here. And yeah, you could bounce off that points of interest, but as you can see, you've got the RSI backing you. Now that it's time to take the trade. And again, I wouldn't necessarily wait for that candle to finish. I would see the price action. See, I've got a grey. It's a good thing about having the neutral zone, you see. This gives you a chance, a breathing space between a bearish and a bullish move. Whereas without this, you'd be going red, green, red, green, green. It'd be very confusing. The grey just gives you that little breathing space to show that there is going to be some kind of change in direction. And like I say, you can trade these. You're better off using these as that kind of little kick, you know, to tell you, okay, get ready. We might have a bullish candle next. And we want the one candle, remember, go our way. So if I saw the next candle, this finish above, which it did, it finished above our baseline. You see the RSI then come above the neutral and stay green. Then obviously, as soon as I see the candle green, could be halfway, could be whatever, I've been on the trade. Again, I'll be looking for that kind of 10 points. Now from the top of the candle, if you were late, yep, you're going to get it easy up. Again, if you entered on half, you'd get it, you know, on the next candle. Easy. So again, another winning trade. Nice, simple, no messing, because you're watching price action. You're not just trading off indicators. You're looking at what the candles are showing you, and you can zoom in like this. You don't always, you're zooming out to get the overall trend, but when we're doing this one candle scalping basically on a 3-minute time frame, you can zoom in. So you can have 2 screens if you want, the same thing on 2 screens, one zoomed in, one zoom out, or split your screen. You can analyze the trend. But we've got our, you know, what we doesn't back test as our chart. which basically gives us the view. It gives us the trend, it gives us the percentage, it gives us the volume, bulls versus bears. So it gives us a bigger overview of what the overall trend is, a kind of bigger time frame, without having to look over time frames or zoom out. So you can just do this scalping as zoomed in. Obviously, so we're talking 1, 2, 3, 4 trades here already, and then here's our bonus trades. As I say, when we see the RSI go the brighter green and give us the overbought zone, just clip it. Most people, they're looking to take sells, but I see so many people fail because as soon as they see an RSI go to this magical 75 zone, everyone's loading sells, thinking there's going to be a massive reversal. And of course, there probably is, but you don't know when. You don't know how long, and if you've got a massive account, you're going to have your account wiped out. So we use it the correct way, which is to see it as a continuation of a trend, with a cautionary note that we're getting towards a level where we could see a pullback. What's happened? RSI can stay in that 75, 85 zone for a day, 2 days. You know, waiting for a pullback for ages. We used to do it. We used to just wait to trade pullbacks. Now, with this axe trading system, it allows us to get in on the trend, which we usually would miss because you're always looking. You always say as a trader, I want to trade with a trend. Your trend's your friend, you hear it all the time. But for some reason, the psychology of how we trade as traders is we're always trying to trade the pullbacks. We always switch on a chart and we see something taken off in a direction. Instead of thinking, how can I get in on this safely? We're thinking, right, I'll wait until that ends, and then we're looking for the reversal. There's nothing wrong with that. One, you have to wait, and two, most people take bad positions and get in way too early and use the RSI, stochastic or whatever, to calculate these overbought, oversold zones, which don't theoretically exist because there is no such thing as an overbought, oversold zone. It's a percentage level based on a strength index. You know, the market could keep going up, up and up and up for a month, 2 months, if it wanted to. Year. It doesn't, because there are corrections. So there's really is no such thing as overbought, oversold, but it's kind of a comfort level where usually there's some kind of correction is going to come. We just don't know when. I've seen many people show on YouTube and on Instagram that, you know, as soon as you RSI hits these 75 levels or the 25 on the lower, you just load in the reverse trades. And oh, okay, yeah, you know, 2 weeks later you've got your profit if you've got a massive account that can handle a drawdown. So, you know, here at the, you know, in our trading group, we teach you to try and do the continuation, which is what this highlights. You know, when we goes bright green, it's telling us we're kind of into an overbought zone, if there is such a thing, but there's more chance of it being a continuation. These are the bonus trades that I get in on straight away. Again, I don't wait for a candle close. As soon as I see it go bright green, especially when it goes brighter green the level before it hits an overbought or oversold zone, they're even more golden. Because obviously we've still got room to move. You can see here, you could have got in. I mean, you could have got in at the top of the candle if you're really lazy. But I would have got in as soon as I see the RSI, which could be halfway, could be here, could be here. You can easily see that's a winning trade from take it from. Again, if you're just going for that magical 10 pips, you're not going for 1,000 pips. Look, even if you took it late, you're still going to get 10 pips. Even if you took it really late, next candle here, you're still going to get 10 pips. And so these to me are extra little bonus trades. I don't go in and set a stop loss or a take profit. You don't have time. You want to get in and basically as soon as I see some profit green, I'll be there. Yeah, I'll be looking for that 5 to 10 pip level, and again I'll look at price action. Like with this one, it's pretty good. I would have held that, thinking it might have gone a bit higher, and in fact it did, because as we see here, look, came out, we took our 10 pips table, waited for it to come back out. And I was telling everyone in the group, you know, these are the great times because most people are looking to take the sell. See the RSI pop out of the zone. Me, no, I'm waiting to take the buy again. A retest. Here it is. As soon as it goes green again, look, it comes out, goes back in again. And again, we go in for either 5 to 10 pips. And again, you know, as soon as it goes green, you have to wait for the candle to close. As you can see, look, you've got 10 pips again. And that's if you took it at the end of that candle close, but you wouldn't. You'd be halfway. You know, as soon as you see that go bright green, you'd be in on that. So easy. Then look at price action. RSI then comes out the zone, and you could be thinking, okay, we're going to go back in again. You know, I'd think, oh great, we're going to get third. But then you see this. Here is the key candle. This is what we like to see. The morning star is a price reversal, price action reversal candle. This is even on Hakanashi. You know, it doesn't matter if trading Hakanashi, normal candles. You know, I just prefer trading Hakanashi. It looks smoother on a smaller time frame. People say you can't use it on a smaller time frame. Bullshit. You've got to just learn how to read the candles, same as anything. So here's your key indicator. This time we've got an RSI break out of the zone, and we've got star. So some people would take a sell here, and you'd got a win. Look, easy. I might have been tempted to take a sell here just because I see the price action. So it's not always all about the indicators. Because obviously the safe thing to do here is you're not going to take a trade, a sell now, until you see red. So you're either going to see price bounce off our average line and you're going back in on a buy again. It's going to go grey and then green. That's fine. Or you're going to see it go red and break here, and you take the sell down to its next points of interest line. But as you become a more experienced trader and you're watching the candles and you trade in price action, which is the most powerful way of trading, forget anything else. Fundamentals and price action are the two things that you should learn as a trader. And once you crack that, anything else you add on, like the AX trading system and everything, just gives you an extra edge. If you can't read price action and understand fundamentals, you're never going to win, because your TA is going to be behind. It's never going to relate. It's never going to do the business for you. Again, people lose because of that. So learning price action, candle patterns is also very important. So here would definitely, you know, for me, I would have been in on a sell. Again, just I'd be cautious. You could go 5 pips, 10 pips. It's a bonus trade within our trading system. We're looking to take a sell anyway, because we're watching the RSI come out. We might be thinking to take a buy if it hits the line again. But this candle here means to me, let's go for it. I'm not going to mark it as a trade. I'm just, you know, this is how you can combine price action with the AX trading systems. So there's your, I mean, 1, 2, 3, 4, 5, 6 trades there. All easy wins. They could be $5 each. They could be $50 each. And this is the first 1 hour London trading the US-30. So again, I like to show things in their most difficult scenario. I usually only trade US-30, which is quite volatile, in the USA session. I wouldn't necessarily trade it in the London session. You can do, but so this is just an example to show you, and you can relate this to anything really, how to use the RSI, backtest the RSI on its own, line up your trades based on the action of the RSI, then drop it onto price action, see whether you would have taken the trades or not. And all these I would have taken. I was deciding to trade US-30 that morning, and that could be you done for the day. That'd be 6 trades. That could be $300. You don't need to do any more. And I suggest that once you've got a level that you need, that's it. You just then walk away. And that's the whole thing about the true scalping, is that you don't have to do 25, 30 trades a day. I do because I love it. It's my job. It's what I do. You know, I like to, you know, show people how you can earn money doing that. You can really only have to trade 90 minutes a day. You could trade 90 minutes in London, 90 minutes in New York, or we do Asian session as well. But if you want, you can sit a whole day, but I wouldn't advise that. I would, you know, as you become more experienced, is set yourself a goal. Once you've achieved that goal, close your laptop away, do what you got to do for the day, come back, reset for the next day. I've learnt to overtrade sensibly. But that's just practice, because I'm sat here day after day doing it. People who've got other jobs and stuff, or just don't want to do that, got a life, then you only have to dip in and out of this at the right times. And like I say, the 7 a.m. UK time to 8:39, first 2 hours, the European Open at 7. You've got to get up early, even if you're in the US. You know, they're the key times, the hour before London, the hour after London. And then you've got that 30 minutes to an hour before New York, up to an hour after, because it's not even an hour after, it's usually 30 minutes after we're done, because most of the news events and stuff has come out. And then you've got that little bit of end of New York, which we'll be doing more live streams on. There's kind of 90 minutes before New York shuts, leading up to the Sydney Open. It's always a good session as well. You can pick each of those time zones and do what I've done there, and you'll see you'll get results. But what you got to do is practice reading by zooming in like this, you know. And again, like on here, look, if we follow it, as it says, look, as I said, it came down. We're looking to take a sell. The sell never happened. We came grey. We're thinking, okay, there's no red on the RSI, no break from the neutral zone, and also we get the bounce off our baseline, which is what I said can happen. You can see, look, stays grey. Trades. And even though the RSI here, look, goes green, look where price action is, below our baseline. So again, risk on traders would take this. I might be tempted. I'd wait for a candle to close. This is where I would wait for a candle close. And where's my TP going to be? Well, again, I'm not gonna hold any further than just below our baseline. So it hits it. A riskier trade, and again, this is how you practice when you see it happen. And again, you're only going to look for five pips. I'm not going to look for the golden 10, because I'm trading against the trend almost at this point in time. Kind of a false break. The RSI is telling me, okay, there's a chance here. So, you know, this is an extra bonus trade, little five pip, a little $25, $20, doesn't matter. Then eventually, here's where you get in on. This is the one. This is great. You might think, okay, I'll get on here, but it spikes above it, you know, the Hakanashi, but doesn't finish above it. You want to wait for the candle close above it, and this is the one. Now you might think, okay, what happens if it's going to reverse on me? It could reverse, but look at the RSI. It's strong. It's already in the 60. It's already well above our average line. Hasn't dipped. Watch the shape of it. Here is your next bang. As soon as that candle closes, again, you want to make sure the candle closes above our neutral zone, our baseline, and that's the one. And again, we get with this one. Definitely, I would go for the old 10 points pips. Again, you easy get it. Look, 3, 6, 9 minutes. So look, we get here to end our kind of stream, just to go over this. Look, I'll have a quick look up here before I go, but here's your bonus trades again. Look, here's where you're going to get in on there, look, and you're going to get in on here, get in here. This time we do have a triple. We have a 1. Again, each one of these you're going to be either just taking green, taking 5, or holding 10. That's totally up to you. Again, look, at 9, at 100, there you enter a second position as well. So I might just take 5 on that one, and then I take 10 on the next one. Look, see the candle, nice, look at that, perfect, 190. And again, here it comes out. I might be thinking there's sell coming, but the RSI just bounces off here. That's key level 66. Decides to go back in again, be in again on that. Again, I'm not waiting for candle closers or any of that. I'm getting in when I see that hit that level. And again, I'm going to hold for 50 to 100 points. And there's a 150 on the table there. Again, scroll out. You've done 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades already in the first 3 hours of London session. If you enter in 2 positions, that's 20 positions. And if each one of those is bagging you $20 easily, $400 in 3 hours, done. And this is not even using the fundamentals and news. This is just trading an RSI scanner with price action and a baseline. But that's just how simple it can be. I wish it was like this all the time. Sometimes it's harder, but you follow this same pattern come what may, and that's what you've got to do. You don't change the strategy if you take 4 losses in a row, because it'll come good. You just traded on a bad range, you traded in a bad period of time, you traded against the trend. There's been some bad news comes out. It happens to all of us. But with this axe system, you've got to be, it's consistent if you stay consistent with it. That's the thing. Don't change how you trade. And that's what most of us do. Obviously, we try a system out, doesn't work, we bin it off, we try something else, that works for a bit, then we take a loss, we bin it off, we try something else with somebody else. And that's what I did. What I did for the first year of my trading, I was all over the place. I would have been quicker just throwing my money down the drain, because I was just trying to get rich quick and find the system that did the business and all that. And then I had to go back and do the hard graft and realize that when it comes down to it, you're never going to be 100%, but you can be a high percentage. You've only got to be 45% right, and you can be profitable. And then decide what kind of trade you're going to be. And for me, I like to be a true scalper. I like to take 20, 30 trades a day. That's my fix, that's my buzz. It's not over trading, that's the system I've got. There's other people who do exactly the same. I do fairly well from it. So, you know, and now my job, what I enjoy doing, is trying to teach people, because I hate the bad rap that scalping gets. You know, it's not serious trading. Oh, I'm a swing trader. It's nonsense. It's nonsense. It really is. I sometimes think this people don't want you to be a scalper because they don't want you to be in and out quick and make money from the market and disappear before somebody else has even switched on their computer. It's just, you know, my paranoia about it. I'm defending the art of scalping, I think, is what it is. I feel like I'm waving a big banner saying, look, if you put the hard work in and you do the research and you have a system that you stick with, you can be successful scalping. You don't have to do this weekly swing trading and hold it and that's a real trader. Nonsense. You know, you're more likely to be burnt doing that than you are scalping. Scalping, you can be burnt in the quickest space if you don't know what you're doing. On a swing trade, you can be burnt and blow your whole account and everything and more, because you're dealing with more risk. You're dealing with holding a trade longer. And like I tell everyone in the group, to me, the longer you're in a trade, the more risk you expose yourself to, no matter what you've set your stop loss to, no matter what system you've got. The quicker you can get out of the market with some money, the better it is. And that's just the simple fact. You don't expose yourself. That's why I don't do pending orders, or try and avoid pending, or I do the odd 1 or 2 in the Asian session when I have to sleep. But it's probably 3 or 4 trades a week I might set a pending order. I hate them because you're showing your hand. Same as putting your stop loss level in, you know, on key levels. Everyone knows those levels. But that's where they take the market to wipe you out. This is why the market is always stacked against you. Always think that. Always go into trading thinking it's against you already. You know, otherwise everyone would be doing it and everyone would be a millionaire. Go in thinking that you're trading a risky market that is set against you as a retail trader, and therefore you want to be in and out as quickly as you can. I'm not bothered what other people do and how they hold their trades, whatever. It's what's worked for me over the past three and a half, 4 years. And if people like trading that way, then that's why I suggest you join our group. And I'll try and help you. It's all about. So that's it. What I've shown is exactly how I try and scalp if I'm not dealing with fundamentals. You know, and again, you can just continue back testing all this. Again, like here, the example, again, once you learn the system, you see the RSI go grey, it dips into the neutral zone. Once it pops out again, and I see the candle, look, I'm back in again. This would be another trade for me. Or people looking to take the sell, I'd be back in again on that. Again, 5 to 10 pips. That would do the job. There's another 100, 200 there, easy. Here, look, the sell. No, red. It's grey. Look what you see. Yes, you've got the bearish divergence here. 1, 2, 3, 4, 5. Look at that. Again, you take the sell. If you're risky, risk on trader. Seen the divergence. Sneaky little 100 pips there if you wanted to trade in the grey. Risky, but you've got the divergence to help you if you did want to take that. Vice versa, when this hidden bullish kicks in, it's 5 the other way. There it is. Look at that. You get in on that, it crosses over. Again, there's your next trade. Literally, as I see it, nice candle, finishes above. Again, you can easily see there, that's another easy trade. Well, again, this blue line we know is our neutral resistance, like a daily pivot on our time zone. So you have to be very cautious, and you want to be getting out before price touches that and bounces off, which it does. Look, it bounces and breaks down, but this is where I would take the trade nice and easy on that one. And then, as you can see here, follow it again. You see some bearish divergence, which is cool. Again, you can count 5, 1, 2, 3, 4, 5. So you could get in on this. That's perfect. Look at that. RSI's broke out the neutral zones, already red from the previous candle, but the previous candle's grey. You could get in on this one. Again, combine it with the divergence, you're in. Always count 5. Let's see, so there you go. 1, 2, 3, 5. Again, there's a nice little 10 pipper. See, 6, 7 minutes there, 3, 6, 9 minutes. You're in profit again. And then all we get, nothing. We hold, and we go bright red. At the end of that candle there, get a cheeky little re-entry again. Or whatever. Again, I'm not necessarily looking for 10 on these ones, but you look for 5, we can 10, it gets it. I'm looking for green. Okay, and again, there's another one there. So now, you know, we're right up just before the New York session, but look at that, you see, they're all winning trades. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 positions. Nice and smooth. It doesn't matter, it's back testing, it is what it is. If these are all losing trades, they're all losing trades, whether I'm back testing or whether I'm live. If they're winning trades, they're winning trades. The only thing that wouldn't make them winning trades is that you're not taking the trades. That's what frustrates me about people in my group or whatever, is that you're just not taking the trades. You know, you've got to take the trade, because you will not know. One, you won't ever win, never mind losing. Also, you'll never know. You never know you're right, and then you'll look at it like this. You know, say I spent a day looking at US-30, I didn't take any trades, and I back tested this. It does you in your psychology, because you'll go, damn, why did I take them trades? And then what that can do is force you to take bad trades next time on. That's why it's good with a demo account. Try out a demo account, and then when you've done that a few times on Doge, don't be too long on the demo account. Get the money in and get doing it with real money, so you get over that fear factor of your own money. No matter how much you do on demo, you know I can lose. It doesn't really matter. It's a demo. You won't think the same when it's your own money. You've got to use money that you're prepared to lose, 100%. You know, not your life savings. And two, you've got to try and forget about that. You've got to concentrate more on this side of things, what I'm showing you now, rather than looking at it going in the red. I go into drawdown as soon as I hit any trade, and that's a big thing for a lot of traders to get over, because it all goes red and they go, shit, I've gone wrong, I best end the trade and take a loss. And I've seen it done, and that's how people do it. Then they go, oh, it's gone my way. You know, you're going to go in the red straight away because of spreads, commission, how the market manipulates, whatever. So you have to be patient even on 3 minutes for it to come your way. Now if you're not prepared to do that, if you're going to sweat when you see your $1,000 account dip down to 900 or 850 before it comes good, if that is going to severely worry you, you're not a trader. You're not going to cut it, because that's nothing to what big banks have to deal with when they're going into millions of drawdown before something comes their way. You know, so like I say, you've got to be able to deal with that psychological factor of accepting the drawdown, accepting the loss when it comes. What we're trying to do is not have any losses, or keep the losses to a minimum using this system, you know. So again, on here, there was the sell. You know, RSI was grey. Look, there was no buy. There's nothing here. Look. It dipped red, but it didn't break out the zone. You know, you could have taken a trade there if you wanted to. You would have actually got a win, but you know, you wouldn't. You'd wait. Then it goes grey almost straight away on you. And here, perfect. And this is kind of like, this is the open. Look, open. We know we trade the opens differently anyway. Say this wasn't the open price action. Obviously, you see the grey price action candles here, up telling you the muscle, and that would be your entry point. Yeah, that candle is bigger than the 5, 6, 7, 8 candles. RSI is nice and green, gone bright green even. So there is a couple of entry points. Okay. See, price went well away then. And then this is without using our grid system. You've got our breakout zone here. Look, as soon as I see price break our breakout zone, our red zone here, look, and we get it back and we get it into our 75 zone, I'd be on this trade here. And I'd be looking to get out of the next points of interest level, which is here. I'd either take the 100 or whichever's nearest. With that, you know. And if you entered late on top of that candle, you're still going to get about 200. You're still going to get 100 points. That nice and easy. Back out the zone, you see some bearish divergence, so it gives you a bit of heads up that the volume, things might dip. Then it's coming down grey. You're thinking, I'm getting ready for a sell. You're well above your baseline. You're still in bearish, bullish territory. Then you get the hidden bullish divergence appear. Again, you can do the old count 5 candles from that. 1, 2, 3, 4, 5. So you could look at putting trader on there. That candle there. And again, we're above everything, the baseline. Again, another easy win. And price breaks below. Go red, no red, and look what you get, another hidden bullish divergence telling you this is a false break. Again, here's where you're getting on your next trade. Close to that points of interest line, so it's riskier. You've got to always accept that. Yeah, as a scalper, I'd be tempted to at least go in for 55 points on that. Top of that candle, look, if you waited, I would get in halfway because I'd see the action. But if say you did wait, look, still Still easy. Look, 100. Easy again. Consistent. Consistent with the levels. Then you see the bullish divergence. You see the RSI dip. You see go grey. So you go, okay, wait. Now let's see what's going to happen. And you see the red. You don't see any break. And then you see the hidden. Now you know you're in a range. Like I say, when you start seeing it going in, out, this is where I'd leave it alone. I'd be away from it for a bit. There's no break. Look again, you're below the average line. Look at that, doesn't hit it. Come out of here, look. Here you might be tempted to take a trade. Look, say you did, you might be stuck in a bit of a zone for a bit. Go red, look. But if you did, again, because we're in a range, I just look for the 5. And again, you'd get it. Look, you get 50 pips, 5 pips, like that. Not going to look for 100. You're trading in a range. Goes red again. You miss that, you're getting on this, and again, you would just get break even. As soon as it see our trend line form, as soon as you see the grey, you'd get out. As soon as you see it change colour, the RSI, you're out. That's what you're trading on. You've got to get out. You're not going to assume, oh, it's going to come red again in a minute. You've got to end the trade, take whatever loss that would be. You mistakenly get it on that, and reset, get ready for the next trade. As you can see on here, RSI goes green, but you don't get the candle. Then you do here. So this is it. It's broke the trend line. It's near the points of interest. Again, the shape of the candle is bigger than the last 10 candles. That would be my entry point for the 100%. I'd be on that. Okay, ranges for a little bit. RSI doesn't go red, just goes grey, doesn't go red, remember. You hold. Again, we're just going to hold 50 to 100, easy. Kind of 15 minutes later, we're there. Then, bonus, it's up, light green, and right on the kind of over zone, 75 zone. Again, we go again for 50, 5 to 10. Again, easy. 2, 3 to me. I'm out about here. RSI stays in the green zone. Not re-entering. Not doing anything. Holding. See the bearish divergence. Go, okay. Get ready. Don't put a sell in like people do. Wait. See RSI break below the average. Still green. I'm not doing any selling yet. Watching price action. This is where you might get in. On the break here, look. Goes red. I would probably put a trade on there. You wouldn't know it's going to reverse against you. You've got to go with what you would trade. It's red. Broke below the average line. I'd wait for that candle to finish. And still, go. Another 100, I'd go on that. So that's another winning trade there. If you got on late, you'd get halfway on that. As soon as you enter, as soon as that's red, even if you were late on this trade here, so you got halfway, look, candle again, you're still going to get 10 pips plus. Even though it looks like a loss, it's a win. You're following the routine, you're following the system. Yeah. Yes, when you see it go grey, you go, whew, thank God I got out of the trade. You're not holding to key levels. You're holding to positions and the consistent levels of take profit. Because you're trading in you can see this is a range you're trading in. So here we go. Here's your green. Here's your next one. Again, as you can see, that candle's bigger than the last 10 or so candles. Broke above the average lines, broke above the neutral zone. It's already 65, which is a strong indicator. It's already closed above our trend line. So that's your next enter. Either aggressively before or you go after. Again, look at that. Going to smash another 10 pips there. Then we get out of the trade, obviously. We see the bearish divergence appear. We go, okay, let's have a look and see if a sell's going to appear. Not guaranteed, but 1, 2, 3, 4, 5. No, look, fifth candle. Look, perfect. Won't get in necessarily on the grey. I might do. I might be tempted to get in on this because I've seen that divergence, seen that candle wick already down. So I might well be tempted because you're red just inside the neutral zone. If not, as soon as that candle goes red, and again, you're not going to wait for that to finish. Enter here. You might be cautious and go, I'll wait until halfway. So, but whichever way, even if you're getting half of that candle, look, you've smashed it. You know, you're well in. Even if you entered at the enter at the end of that candle, you're well. And you know your TP is going to be no more than that trend line. Trend lines, when they appear on the system, are very powerful. You know, so again, don't be blind by just gathering the pips. Look at the TA indicators are telling you as well. So again, another 10 pips there, nice and easy. And again, the RSI just ranges along, doesn't touch anything. There's no trade, no trade. Then we're there. Oh, there you go. That's the end. There's no more trades. That's the end of the session. So that is a full day scalping the US-30 London Open. Ooh, there you go. And this is what you should do on, doesn't matter what it is, any pair, any indices. This is what you should be doing to backtest any system that you're doing. This is how we backtest our system, and we know it's pretty powerful. So we're talking from London Open, we're talking 1, 2, 3, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23 positions, which if you double up as I do would be 46 trades. One thing, 23 minimum. And really, out of all that lot, there was potentially one loss, potentially, if you were not following the system. So that, I'm going to post that. 23. So winning trades. And US-30 is difficult to trade. Well, so they say. I mean, I love it, but it can be, but it's less spiky than other things. You look at GJ and other things, there's more spikes, but the spikes still eat you 5 pips, and that's what you'll be looking for. 5 pips on pairs, 10 pips on US-30, DAX, gold, you know, and we do different ones for the Asian indices, but that just shows you the power of the system. And this is trading not with the news. When the news is brought into this on board, there might be some trades you don't take, some you do take, and same as the opens, we take the opens into consideration as well. But this shows you if you use the combination of the RSI, divergence, a baseline, a breakout system, and most importantly price action, combine it all together, work on it until this becomes second nature, then this is the results you can get. Like I say, 23 trades on US-30 in one day of trading, you know, 12-hour session there, 9 till 9, if that's what you want to do, earn your money. Each one of those could be $50. It's a lot of money. You know, that's more than a week's wage for a lot of people on one thing, one instrument across the board. So it can be done, and that's on a 3-minute time frame, which is my favourite. So there you go. That's what I want to do tonight. I just wanted to show everybody how good the Axe trading system is. Not an automated system. You've got to put the work in, like with anything. It's not magical. It's not made up indicator. These are all the most popular indicators that most traders use, combined into a system that you've got easy access to. We've tweaked some of the parameters, obviously, for true scalping. But there's still all these, you know, you can find them all. There's nothing, you know, it's not some holy guru indicator. But if you can learn the system, learn price action, configure it with the fundamentals, you'll be a successful trader. That's all I can say. So if you want to learn more, then obviously join our group. Just go to the website www.mohawkforex.com. All the information is on there and in the description below. And I'm looking for obviously more students for next year. We'll grow the group, grow this channel. So drop me a message through there and you can have me as your mentor. The team will be expanding, so there'll be more mentors going forward, different time zones as well. So it doesn't matter where you are in the world, we will try and help you if you think scalping is your thing, and you get access to the Axe trading system as well. So yeah, there you go. So thank you for joining me tonight on this you know, little different live stream, just to go over the system, because people have asked me to do it and explain what you get for joining the group and how you can use it. And this is just back testing one thing, you know, to show you how it's done. So we'll do another live stream when the markets are obviously back open again. We'll do some scalping, live scalping with the system in between near the Christmas New Year, next couple of days or so. So give us a like, subscribe and share, and click the bell so you get notified when I'm live next. Thank you for joining me tonight, and trade safe, and I'll catch you on the next live stream. Okay, everybody.